La plus grande de nos richesses ne se mesure pas en millions. Nous vous faisons découvrir des ovnis pour vous permettre d'en devenir un, vous aussi. Sportifs, entrepreneurs, artistes, ils nous partagent chaque semaine leurs récits de véritables trésors d'informations.
And we are live. So for the first ever, at least for me, English language podcast on OVNI. I am super excited to host Zoe Mohl. Am I saying it right?
Mohl, but that's fine. Yeah.
Mohl. A former colleague of mine at New Fund. We've gone our own way since New Fund, and we're here to hear more about Zoe's path and what she's doing now. And one of the reasons why I thought it was very interesting to have Zoe on this podcast is she's one of those rare operating partner who turned into an investment partner. And I think we hear a lot of operating partner wanting to break into investment. It's tough. She did it. So she's one of those, I might be answering a question. She's one of those UFOs for me, one of those OVNIs. And that's the reason why we invited her. But Zoe, would you mind introducing yourself to everyone listening?
Good intro. I like to think we're all OVNIs. We're all strange in our own ways. It's just how much we choose to show.
All right.
But yeah, no, happy to introduce myself. So I'm Zoe. I'm French-American.
You sound American.
That's because I am. I'm totally cheating.
Born
in Paris.
in New York.
Born in New York. Like you, right?
No.
Oh.
Paris. Raised in New York.
Raised
so
in
that's
New York.
what we have in common.
We did switcheroo there.
Right.
But yeah, and I sort of grew up in both countries, went to school in the U.S., at Yale for 4 years after being in France. And then, in the U.S., you start working quite early. So 21, started working in M&A at JPMorgan in San Francisco. That's when I discovered the tech sector.
Wait, so let's do a first check. How do you go from being in Connecticut, Yale is in Connecticut, correct?
That's correct, yeah.
To saying, and that was what,
2014 graduation.
2014, yeah. To saying, hey, I want to be in tech in San Francisco. That world for me, the world of Yale, doesn't sound like San Francisco.
It's not. The truth is that the way I've operated as a student in school and then as a professional has been, okay, what's an interesting part of society, an important part of society that I know nothing about? That's how I chose my major at Yale. I majored in economics. I didn't know anything about economics.
Is that a common major at Yale?
It is. It's one of the best majors on campus. But, it's not the one where I had the most ease. It's the one where I was like, okay, this is, financial crisis context had happened like a few years before because I arrived in 2010. And then I was like, well, what's something that's important that I need to understand in the world? And that sounded like something that was interesting.
Is there an excitement for you to search something you don't understand and want to tackle?
That's always been an excitement. Yeah, when I don't understand anything about something, I get super excited to start from scratch.
So I got great deals for you in semiconductors, photonics.
I look at those too.
So Yale, so you're like, okay, I major in econ, saying, hey, I'm excited about tech. I know nothing about tech.
I can't even say I was excited about tech. I knew absolutely nothing about tech. I didn't know anyone who worked in tech. I think, when you're in the rat race at a school like Yale, you sort of just try to do the most competitive thing, which may be a mistake, by the way. But when you don't really know what you're doing, you try to do the best major, and then you try to do the best society, and then you try to do the best job after school. What I knew is that I wanted to learn business. And I thought, okay, investment banking at a good bank makes sense, right? Like you'll work very long hours, you'll work very hard. And when I got the job, I thought to myself, okay, well, they offered me some other group in New York. And I thought, well, if I'm going to work really hard, I might as well do it in a sector that's important and I know nothing about. Oh, tech.
New York was probably financial institutions working on banking jobs. I mean, financial jobs as a banker.
Yeah, it was closer to that. It was another.
What was the bank called?
JPMorgan.
It's JPMorgan.
Yeah. And so I was like, well, I want the, IBD tech group in San Francisco. I made up something about having friends and family in San Francisco, which was very far from the truth.
They're not listening.
Yeah. And off I moved to San Francisco.
So 21
after,
years old.
11 interviews.
Wow. 21, 22 years old. You moved to San Francisco to become a junior banker at JPMorgan.
That's right.
M&A practice or whatever group coverage practice they have for tech companies.
Exactly.
And so what did you expect to do and what did you end up doing?
I think I expected sort of like clean-cut bankers dealing with massive businesses that were profitable. And of course, there was a part of that, right? But actually, it was very surprising because the portion of the tech practice was the most prestigious practice within JPMorgan, and it's also the one probably that worked the hardest.
So it wasn't the practice that advised Apple buying.
I don't know. I don't know. They had all the big clients that you can think about. I'm not sure I can say any
what
names.
Missions did you work on?
Like IPOs that turn into M&A sometimes. Defense activism advisory against like predatory hedge funds. Debut debt offerings. Oh, that one I can share. Cadence Design Systems and EDA Semiconductors. That was my first deal. $350 million first debt issuance. So you have to go and get your rating and go and get your financing on Wall Street with people who don't understand anything about the technology. But the more interesting part of the job, to not spend too much time on JPMorgan, because I didn't spend much time there either, but was that I discovered the non-profitable part of the tech industry, right? Like the Ubers and the WeWorks, et cetera. They were doing private placements and were little-known companies. I remember taking my first Uber back from the office late one night and thinking like, wow, this customer experience is incredible, right?
But how do they make money? They don't
Did
make
not.
money.
At the time, they were losing a lot of money. And even JPMorgan was not making that much money off of doing a private placement with a company like Uber, right? It was the promise of being the long-term partner of a company like Uber that was going to become big and potentially doing their IPO, doing their debt issuance. That's how a bank makes money down the line.
But you guys as bankers, so you're trained as bankers to help create those models, discounted cash flow models, comparable model, present models.
Yeah.
And you've been used for those banks and what they're trying to train their analysts for the past 20 years. This is how you value a company. And all of a sudden you got all these new clients, which don't work from a discounted cash flow model like Uber. You cannot value their you cannot do a DCF analysis.
There's no profit. So by definition, you cannot. Yeah.
And so how does a bank like this adapt to this new environment to, I guess, survive and keep making money?
Yeah, it was kind of interesting because you had I think everybody in San Francisco knew the value of these companies because they'd seen, Google, Facebook, et cetera. But you had other bankers on the East Coast that maybe were a little bit less familiar and less enthusiastic. It was all about future potential. So you were making some money on a private placement, say like Tiger puts $50 million into Eventbrite, or I can't remember the amount. Like you're advising that you're going to make it like a small percentage of that. That's tiny for JPMorgan. JPMorgan does not do that. They only do it because they hope to lead the company to an IPO. Sure. And do debt issuances and other equity issuances down the line. So it was more like the old school bankers and the sort of tech bankers, but tech as a practice was already on the rise, right?
So you joined expecting wearing a suit and tie, and you ended up wearing a hoodie and
no hoodie,
and jeans.
No hoodie. You had casual Fridays where you could wear jeans, but you didn't have ties for men. And I had to review my wardrobe a little bit to tone it a little bit down, but it still had to be, you're still a banker, so you still have to be crisp.
And so that's 2014, 2015 for you. Right. And that's when you realize, okay, well, there's this whole world of non-profitable businesses.
Yeah. Yeah. There was Eventbrite also that I thought was an interesting case study in ticketing.
Why?
Because they were going about it in sort of a different way. You had StubHub and others, but Eventbrite was like, hey, you can create your event for, any type of event. Doesn't have to be a big event. We don't have to sign big venues right away. They were a platform for both event attendees and organizers. And so that model with that network effect that gets created was sort of new at the time. And Kevin Hartz, one of the founder of PayPal, and Julie Hartz were, I think, co-CEOs of that company. And same thing, like it was a company that was burning through a ton of cash, but growing at an insane rate and catching the attention of smaller venues to start with, and then eventually grew up to like catch the attention of bigger venues. But yeah, so like those companies, the Ubers, WeWork was like, I think the most extreme example, right? Like history is, in hindsight, of course, you could see that. Eventbrite, these were companies that were growing at an unprecedented rate and were super sexy, from founders that had already started companies previously. And so that was sort of the Silicon Valley vibe that I discovered.
And yet we're in Paris.
And yet we're in Paris. Yeah,
we're going to get there.
Yeah, we'll get there. But yeah, so that was the first professional experience, I think.
So how did you leverage that? How did you go about searching the next thing you don't know and you want to tackle?
To be frank, I did not. I didn't. I think, when you search for logos and you're in the rat race, you're sort of like very focused. And once you have those, you sort of have the luxury of taking a step back and be like, okay, like, what do I actually want to do here? But I was young. I was like 22-ish when I left. And I wanted to sort of study business from a different angle. Not a financial one, a little bit less of a financial one, and a little bit more of a strategic one. I wanted to understand sectors, markets, like competition, things like that. And so I went into strategy consulting, and I decided that I wanted to do that in tech specifically, because I discovered that tech was for me, but investment banking was not. And there was this consulting company called Altman Villandry, renamed Altman Solon now, that was heavily recruiting on Yale's campus. And a friend of mine had joined them and said, like, this would be perfect for you. We're recruiting profiles like yours. And, this is profitable tech, right? Like, this is infrastructure. Like, our clients are private equity companies trying to, like, buy tech companies. So it's either telecom or B2B SaaS or, like, infrastructure. So it was, like, data centers, like discovering data centers, fiber.
So you left this non-profitable world to go back to this more historical, financial, but tech world.
Tech
from a business point of view.
Backbone with clear EBITDA. And sort of, I think it's important, right? Like, too often we forget that everything you use in terms of tech sits on a lot of infrastructure, right? And I don't mean just physical. I mean, you're tapping into data centers. You're tapping into servers that themselves are virtualized. VMware, huge company. On top of that orchestration, there is like a whole network to distribute those workloads, right? Like telecom, fiber optics, small cell towers in cities. And then you sort of get those workloads on your phone. There's a whole sorts of like cybersecurity on those workloads, whether from software or hardware perspective. And all of that, and the network, of course, that goes into it is incredibly important. And we tend to forget it, right? We take it for granted. There was just an electricity outage in Portugal and Spain. I just got back from Lisbon, so knock on wood, I'm super lucky.
Could have been stuck in the airport for days.
Yeah, exactly. Like that's when you sort of realize, wow, our whole lives depend on electricity. Well, guess what? There's like 1,000 other layers in terms of tech.
And so,
for it all to work.
Was there something you were missing at those jobs?
Yeah.
That built to the point where you're like, okay, the excitement is at the very investment level. I've been a banker, I've been a consultant, but you know what? The most excitement is making that decision whether I want to invest or not.
Yeah, I had no idea I wanted to. When I was at JPMorgan, a lot of my class left at the same time as I did, but they were I think the bankers that did it right sort of knew I'm in banking for 1 or 2 years and I'm going to work really hard. And then I want to go and do VC, hedge fund, private equity. I was not one of those. I was a baby banker who was like, Lulu, I'm discovering this like new world. And I had opportunities to interview with VCs. I think I did a couple of interviews.
Where you're like, this world is not for me. I want to go back.
And I had no idea what I was facing. I was like, these people are crazy. How do these businesses even work? They're losing so much money.
Interesting. So you're very skeptical.
Yeah, very, very
so
skeptical.
So you go back to consulting. You stayed for 2 years. Is that right?
Yeah. By the end of banking, I was less skeptical already because I'd seen, other people joined Silicon Valley, and I understood the models because I'd seen them inside out. Consulting brought like the backbone of the internet sort of component. I was mostly working on like big deals, like 1 billion plus, on servicing private equity funds that wanted to buy those companies. So like, tell me about this market, tell me about the competition, tell me about the tech. Can you model out the top line of how this company is going to evolve in time? So I had like sort of both perspectives. And so I'd had like 3.5 years of work experience at this point between banking and consulting. And I was like, okay, now I feel like I have sort of this toolbox of things I know how to do. What do I actually want to do? And that was both a tough but also amazing time, because when you're interviewing in such a, I was in a privileged situation. I could talk to, I was interviewing with the big like Microsoft, Facebook, Google in strategy. And I was also looking at private equity, which is like kind of ridiculous now in hindsight, like the big PE firms in the US and some VCs. But I had this itch. I'd been in the US for like close to 9 years. And I had an itch that was both personal, but also professional. I was like, okay, I'm meeting a lot of French engineers, entrepreneurs that are going back to France or to Europe, but they don't have to. They don't have a visa issue. They could have built their company in the US. They could have made a lot of money at Airbnb or Meta or whatever. Why are they going back? Where are they going back?
Without mentioning politics, even though it is, I have a feeling, the election of Macron definitely had an impact on,
of course,
on French people in the US.
Yeah.
And me being one of them, saying, oh, I don't want to judge, what he's done. It's not my job, but okay, there's new blood in town. There's a 39 or 40-year-old president.
Yeah, he was
pro-business.
Yeah.
And I think historically, France hasn't valued business as much as the U.S. has valued business as a creator of growth, as a driver of wealth. And so I think I was one of them who was like, okay, this guy's going to be president. Maybe we're putting attention on something that's going to benefit all the people. And I did see that from, I moved in 2017 to France, and I did see, it's interesting to hear from the other side of the ocean.
Yeah.
2017, 2018, 2019, 2020, a lot of people slowly moving back to France.
Yeah.
And so, okay, so you see those engineers moving back to France, and you're like,
I came back 2 years after you.
You're like, they don't need to move. So.
I was a bit perplexed. And every time I would come back to France on vacation to visit family, the personal reason was also like weighing on me, right? I wanted to be close to my family. A lot of my family's in France. And I remember like visiting Station F, and I was like, whoa, this thing is massive. Like I'd never seen that in San Francisco or in New York for that matter. And I had a friend who joined Aircall, and I was like, oh, interesting. What is this, company? And I'd also learned a bit about Datadog, which is like an American company built by French guys. So I was like, oh, that's interesting. And I was on vacation in Paris when I was interviewing with all these different companies. And I remember a mutual friend of ours, Jen Segeren, to name her.
She was on the show, probably a year ago with.
I listened to it. It was really good. Yeah, with Mathieu Stéphanie.
Yeah.
So Jen is a recruiter, a very, very talented recruiter, and she knows everyone. She's an amazing network, and I'm lucky to be friends with her. And so I was back on vacation. I think I was having lunch with her, and I was like, oh, if only I think I want to do VC. I think I want to do early stage. If only they had that, in Europe, or I think I said something silly like that because I had no idea. I didn't really know anything about the ecosystem. And she was like, "What are you talking about? Like, there's plenty of VCs here.
Yeah, it's developed.
It's developed a lot, and
you should meet this transatlantic VC firm.
And you should meet
New Fund.
And she introduced me not just to New Fund. She introduced me to a bunch of people. I had no idea who was who or what investments were good. I was on vacation. I had like maybe 3 days left, and I did like 5-6 coffee meetings in the span of 2 days. One of them was with New Fund, and New Fund was the sort of only one that was like very frank with me.
I think that's
the French are frank.
The French or Franks?
The French
Interesting.
are frank.
All right.
The French are much more honest than Americans, I'd say.
See what you mean. Okay.
You're on the West Coast, everyone's super nice. East Coast, it gets a little bit more real. Then when you're back in France, you're like, okay, this is no one,
Too real.
I like it that way, but it can be a little bit negative sometimes.
Sure.
So there's this, everything in life is about finding an equilibrium. But anyway, so I meet the guys at New Fund, and they're like, look, you want to do early stage VC? You've only done sort of these big deals. You will have no clue how to invest at seed. And they were right. They were so right. I was 26, and had I become an investor right then and there with the checkbook, which was my goal. I was like, I want to invest super early. I don't think I would have done very well. So to
clarify to people who are listening or watching us, you joined New Fund as an operating partner.
I did.
Focused on
bringing money back in. That was
the eternal problems of VCs, right?
Like,
it's easy to invest, it's tough to sell.
Exactly. It's very hard to exit. And so they were like, look, you have great experience, relevant experience for something that we need to do. And that is exits.
Selling our investments.
Exactly. And they had some investments.
That's very interesting. I don't think many VCs have that position in-house.
Some big VCs do. Like
the big VCs,
they
start,
is very
sure.
well known with this. But no, it's quite uncommon. And I don't really know why, because it's so important.
Lack of budget? Maybe they don't think that the budget should be focused on that specific role?
I think they're in sort of this illusion that investors will do the end-to-end, right? Investors will invest in a company,
They'll know how to manage the
help them out, and then help sell. When in reality, a lot of VCs don't even do the middle part, to be honest. They'll say that they'll help out, but as soon as they see the company's not doing well, it's like dropped. Or they get to the end, and an investor could be a great investor, but they have no idea what an exit process looks like. Right?
And you did that at New Fund. You basically build those. You build the momentum and all the infrastructure around that to sell companies.
Yeah,
to sell investments.
The thing is, to be honest, there is no infrastructure. There's like there's maybe a framework of mind. It's human capital. It's depending on what type of VC you are. Exits of different sizes have an importance, right? So Balderton only invests in companies that have like 1 billion plus exit potential. But actually, a lot of VCs could have great exits at 100, 200 million.
Sure.
Especially if you're doing pre-seed or seed. And so it also depends on how much equity you have in a company. So you could have like a tiny exit, but if you have 50% of the company and you're doing a 30 million exit, you're still bringing in 15 million. That's not nothing. And so that doesn't happen very often. But it does. Like, it does happen that you have like 20, 30 plus percentage points of equity in a company.
No, regardless, I think that, you hear investors who say, past 5 years, if a company is not going to be a 10X, get rid of it. And get rid of it to a point where sell it, fire sell it. I just invested with a German fund, and they have a clause that says, we can sell our shares for $1. And it's funny to me because I was like, I've seen that. But I was like, why? So there's two schools of thought there. But anyways, you joined New Fund to help them get rid of their investments in a positive upside way.
Yeah. Well, not always, to be honest. There was every case scenario. They, of course, made me understand that they had beautiful exits that could be done. And there were some that I worked on for a long time.
Not all of them went through.
And then there were smaller ones. Some of them went well. Some of them, like one of them, went bankrupt, right? Like you try to change. Some of them, it was more of a strategy question. So this is where you like wear multiple hats as an operating partner doing exits. You're like, okay, either I have an amazing asset and I just need to structure the exit process in like an old school way with like bankers. Sometimes you hire consultants to help understand the sector. If it's a beautiful exit, makes sense, right, to put in the money. And then other times it's like, whoa, this company actually has been stalling, but they have potential. So let's try to find a strategy where they can regain growth or build a product that's sexy enough to sell them to this or that strategic acquirer. And so I did both, right? I spent more time on the former, but the latter was like also a big part of my job. And so when you do that, it can result in, okay, I changed the strategy and it goes well.
Right.
And and I sell, or I change the strategy and it still doesn't work well, and there's a bankruptcy.
And yet, in the back of your mind, you're saying, "Okay, this is great. This is what I've learned to do in my previous life, the beginning of my career." But I mean, I've never done that. And at the end of the day, I want to become an investor.
Yeah, that was always in the back of my mind.
And so what happened? You do that for 2 years. There's a peak of, you get rid of the bulk of exits that New Fund wanted to do.
Yeah.
And you come to a point where there's not as many potential exits because you've worked on all of them.
No, I mean, there's always exits to be worked on.
but so you seize the moment to be, okay, I want to be an investor.
Yeah.
And what I can confess is I've seen you work at New Fund as an investor, and you're a passionate investor. And I felt, and correct me if I'm wrong, is you were too intellectual for the pre-seed. You wanted more than just the human. I mean, obviously you crave that human relationship, but there was not enough meat on that bone for you to be like, okay, I want to have a conviction on this deal and this deal, and I think I'd be the perfect Series A investor.
Yeah, it's a mistake.
I see this as a compliment, and you see what was the mistake?
Well, it can be a compliment, but it can also be a criticism depending on where you are in the investment stage, right? So, like if you're doing pre-seed seed, we all know that what matters most are the founders.
No,
right?
but right. What I'm trying to say is, I think you joined the best possible house for you to reveal yourself.
Yeah, I learned a lot. I think I learned that the level of intellect you need to put in, or like extracting data that's just like very little data. Why would you overanalyze? It really depends on the stage of the company. And so if you're doing pre-seed, as you said, like that exercise makes absolutely no sense, right?
For you. That intellectual exercise.
Yeah, I don't think it makes any sense to be like, okay, like I need to know exactly what you're building. And
what is your 5-year business plan?
No, so I never went that far because I knew that was like silly. Because I'd seen so many business plans that did not pan out. But yeah, I think that's true. And I think I learned from you, entre autres, to like look at it from a different lens. Because at pre-seed and seed, what matters are the founders.
And so what, you got bored?
So I became an investor 2 years after doing exits and like secondaries and other like fundraising. And I think the first couple of months, I was really in this like rut of over-intellectualizing. And then I sort of had a bigger network of like younger founders instead of like founders that were exiting, 5-10 years down the line. And that's a different network, right?
Sure.
And so you sort of get this different energy of like optimism, et cetera. You don't have founders that have like roulé leur bosse, right? Where they've like gone through a ton of stuff, like challenging things, and they're sort of more measured in what they say and like maybe a little bit less.
I wouldn't know how to translate that. Rouler leur bosse.
That's why.
Okay.
That's why I used it in French. But yeah, so and once you start seeing more of them, I'm convinced of this. When you're an early stage investor, you have to see lots and lots and lots of founders at the beginning to see what good looks like. And so I think that happened around like month 6. I started being a little bit more lucid on that. And yeah, I made a couple of investments, wanted to make way more. I think I was one of the stubborn ones. Like when I really believed in something, I like banging my fist on the table, probably annoyingly. And sometimes it went through and sometimes it didn't for various reasons. And yeah. And then I got a phone call from Balderton, in 2022, was it? Yeah. And I sort of met the team, loved them. I thought they were amazing. I thought also like the stage made a lot of sense. So
if we talk a bit about them, it's a I don't even know how much they have in AUM.
5.6 billion.
5.6 billion VC firm, focused mostly on Series A and above, but they do invest at the seed level.
Yeah. So Balderton has been around for 25 years doing early stage.
One of the first investors of Revolut.
First investor in Revolut.
A lot of people don't, they think Index is the first one.
That's not true.
And I've been corrected on that.
Yeah, I know. The first investor is Balderton.
Is that like the breakthrough investment? The biggest
it's not
investment?
the only like big success,
I'm
but
sure.
it is like the
most
biggest
major,
success.
yeah.
Probably one of the biggest ones in Europe with IDN and Spotify, right? Like, and it's still going so strong. It's $4 billion of revenue, over $1 billion of profit today.
That is huge.
And the momentum just continues. It's like,
But so, and what else they're known, but what else are they're known for?
they did MySQL back in the day, Contentful. They, in 2019, Seringa,
Aircall is one of them.
Aircall, Wave. Seringa invested in Wave at Series A, like in 2019, self-driving cars, using like a totally different technique than Waymo and Cruise at the time. And that company raised $1 billion last year. That's the biggest AI fundraise in Europe. Photorum also.
So you joined
Series
a
A.
team. They're based in London.
Yep.
But they were fine with you being based in Paris.
That's what they wanted. Yeah.
That person to kind of cover France. And France only?
France and Belgium. But so the way Balderton works is it is a multi-stage fund. It has the early stage fund that's been around for 25 years that invests like $1 to $20 million checks, sweet spot Series A, but does some seed, does some B. And then you have the growth fund that came about around 7 years ago, and that's a bit bigger. And it does 20 to up to $100 million checks. So those are like two different teams. Those are two different jobs. We work together a lot, but it's like separate teams. And then the way it works is the HQ is in London, but there are antennas in every important geography, right? So they hired me to cover France and Belgium out of Paris. That's what my predecessor left to start his own fund. And so they were looking for someone to cover France. There are 2 people in Berlin. There's like 2 people who go back and forth with Stockholm and the rest of the Nordics. There's people who go to Madrid and Milan, et cetera. So it's very much like a boots on the ground fund. And the way we work is you source a lot, and then you're supposed to redistribute to sector specialists, depending on what you see. So it's both like boots on the ground geography, but also like get deep into certain sectors.
So you each have your expertise and...
Yeah, correct.
What's your expertise? What's your area of... what's your area of interest these days?
No surprise, it's a mix of my history. So it's the backbone. So I like infrastructure.
Infrastructure.
Yeah. I like DevOps. The last investment I worked on is a company called Checkly, Series B out of Berlin. So not in France, but that I met at a DevOps conference. They do synthetic monitoring think of what Datadog does. It does like lots and lots of different observability. They do a specific type of observability that's preventative. And
that's an investment you just made?
Yeah, last year.
Okay. What's let's try to spend the last 10 minutes of this conversation on, now that you've broken into being an investor and you've been an investor for quite some years, how to be a good investor. And so I had a question, what's a skill you use daily as a VC that no one talks about?
Yeah, a skill, but also a hole in the brain. It's both, I think, is like the switching ability to switch. So if you're an early stage investor, even if you're specialized, you will be switching a lot between topics. So if I give you like the example today, this morning I had coffee with a founder who's in AI agents that does like mostly like customer support and onboarding. So AI agents for B2B. Then I talked to a founder then I talked about like synthetic populations that are increasingly used in the synthetic data space.
So you're mentioning someone who has ADHD.
Yeah, exactly. It's like
or ADD.
Then I went into robotics, and then I looked at a company in fintech. Like that's a part of one day,
It's interesting because, we're joking about ADD and ADHD, which are supposedly diseases, but there's increasingly research that says that they can actually be skill set.
Oh, definitely. Yeah.
And what you're describing is that skill set of being able to quickly switch, subjects and, basically putting them in different compartments.
Yeah.
And being able to go back to one when you need to.
Yeah. I mean, being ADHD is probably a very positive thing in this profession because you need to be able to
correct.
And it's actually in tech, it's been proven that like the rate of ADHD and ADD folks
for founders
and VCs is much, much higher than average. But so I'd say it's like two things, right? Like your ability to switch and really be passionate about what you're looking into. But also like your ability to listen. It's so important.
Sure.
I think we tend to forget this, but so many founders don't feel heard, don't feel like the VC across the table understands what they do. It just takes like a little bit of preparation before our meeting and just listening closely to what the founder is saying to understand like what's important in the conversation.
You can see when a VC is not listening.
Of course.
And you mentioned earlier Spain and Portugal. By the way, for those who are trying to put a timestamp on this episode, it happened yesterday. So we're April 29th. I shouldn't say that, but April 29th, 2025. What happened if you're in France and you lose all access to your CRM, to your LinkedIn, to all those tools that make you an investor? How do you go about meeting founders?
That's an excellent question. What if we have a power outage and lose all of our tools? I think it comes down to relationships in early stage. So
you take your bike and you go to Station F?
I think, well, not to say that I know where entrepreneurs that I like live, but I'd still have to like sort of call them or something. But let's assume I have a phone. Usually the founders that I'm close with, I'm on WhatsApp with. And so...
the idea is not there's a power outage. It's just that you're a VC 20 years ago. There's no CRM. There's no LinkedIn.
Yeah.
There's still, forget about the power outage.
You use networks. So like you got along with the founder and you helped them out with, even though you didn't... You won't be as not powerful. What's the word? You won't be as effective today. Of course not. But like if you had to, and honestly, like if you look at the investments we've made at Balderton, a lot of the founders are people with whom we've had relationships for years.
So you guys have an unfair advantage because the VC is just more established, has better relationships.
The brand helps a lot, right? The brand is built on the investments that you've made and the people that compose the team, the partners, the ex-founders, ex-operators. But I think it's also about relationships and relationships are built by spending time with founders. And I'm not even talking necessarily about founders that you back, founders that you like. There are many founders that I spend a lot of time with that I have not invested in and helped out in this or that way. And they've helped me out too. It's an ecosystem thing. You're building on that ecosystem. And so
it takes time, right? It takes podcasts. It takes appearances on TV.
Yeah, it does. It takes also, I think, traveling around, something that we don't talk about enough. But like going to San Francisco once in a while, spending some time in London, spending some time in Berlin, seeing like different topology of founders. Because it's one thing to be able to read through like a French founder's background. Did they go to Prépa? Did they go to this school? Did they? But you're sort of losing that novelty of, hey, I'm a blank piece of paper. I'm listening to a founder's story. Not trying to analyze just yet, just listening and seeing what happens.
Have you ever backed a founder that made no sense to you? Leveraging on what you just said.
Yeah.
And you travel, you understand, the different dynamics in entrepreneurial profiles, fundings. Is there someone you're like, okay, his idea is amazing. Yeah. There is something, but it makes no sense. The person makes no sense.
The short answer is no. I think I like to look at all types of profiles, right? Like it doesn't really matter what your academic background is. The idea also doesn't matter. But
so at the end of the day,
weights are on execution and how hungry you are as an early stage founder. And so I've certainly backed companies in sectors that are not sexy. I've certainly like pushed companies where no other VC was looking. That's happened a lot. But I can't say that when I look at the founder, there wasn't something special about them, right? Like either because they'd built something before or they had a brilliant career or they were just out for revenge because they didn't go to the school they want to go to. There was always something, right? So I can't say that's true, but yeah, I don't know.
Because a lot of people say, oh, you invest in the craziest founders and it makes no sense on paper. But there's something, what you're saying is if they really don't make sense, that means you do go deep into the analysis of the person, the business, the potential.
Again, depends on the stage, right? Like you're de-risking at every stage.
Yeah, and you're
first stage is you're de-risking the founder. Second stage, you're de-risking the product. Then you're de-risking the product market fit. Then you're de-risking the scaling, and then you're de-risking.
Look at you and your intellectual
approach
of the
no,
you're right.
The onion peeling, right? The famous onion peeling. That's how it works. And so you sort of have to adjust yourself intellectually depending on the stage at which you are.
And those are different. You know, what you're saying is, I'm not making fun. Those are very different jobs. And a seed investor is going to be someone different from a Series A investor, is going to have a different skill set, is going to have a different support throughout the investment than a Series B, Series C, et cetera. And I think a lot of entrepreneurs don't necessarily realize that.
Yeah, I'd say the gap is, of course, bigger between like Series B, C, and seed. I think you could sort of lump them together, like B, C, D. The investors can sort of look at it, but have to be a little bit more careful on the aspects of like the product, the beginning, the distribution. Are they, and then seed A, you also have to know, but you can like lump them a little bit more together, but you still need to adjust, of course. Yeah.
Let me ask you a last question. We're getting to the 40th minute.
That went fast.
I'm getting technical calls like you need to hang up. What's a cliche, and we talked a bit about this, what's a cliche about venture capital that you'd like to break? I think what I mean is we talked a bit about it throughout the talk, but...
Yeah. Ideally, the one I'd like to break is that VCs are not helpful.
How are you helpful?
I mean, not necessarily me. You were also helpful. I think a lot of the times...
A lot of VCs are not helpful.
Most VCs are not helpful.
Okay. So the cliche is find your VCs that's helpful.
Yeah.
How do you ensure that?
The cliche is VCs are not helpful. And that's unfortunate, right? Like, I think if you're backing a company that does super well, they're going to need less help, of course. But there will be like moments where there's a crisis and you're supposed to drop everything. Like Fair Money. Remember Fair Money? Your investment at New Fund, this amazing out of nowhere Nigerian fintech, microcredits.
They call me and they can't get on the Google store.
Yeah, is that exactly. That's what I'm referring to.
And you know what? We showed up. New Fund showed up.
You showed up, right? You showed up.
And we helped them get back on that Google Play Store, whatever it's called.
Yeah. You were like, everybody drop everything. We need to get them back on the Google Play Store. This is destroying the company.
Okay. Yeah, the cliche is...
That's one way of doing it. And that's important for the winners. Also exits for winners. The other companies, when you don't yet know that they're winners, you can certainly help them. You just need to find a way to get them to trust you, to tell you what's going on and help them through. Like I had a company tell me, not to boast or anything, but tell me like, hands down, you're the best VC I've ever had. And this guy's had like great VCs. And I'm like, well, what do you mean? Because I helped him look at different markets, because I helped him look at, different questions that he had, strategic questions, and made a couple of intros, being biased like you, and I think we'll try to end it there, is, when you're starting your first fund, you're going to work twice as hard on making sure the investment you make are successful. Yeah.
And you're going to help those startups a lot more. And if you look at historical IRR, returns of first-time funds, they're typically higher than second-time funds and third-time funds. And I think it goes to try to break that cliche you're trying to break. Yeah. So I guess the takeaway is, if you're about to get a term sheet from an investor, call the startups that have received funding from that investor,
that specific individual. Yes,
it's funny. I this morning we had a kickoff with this company we just invested in. The lead wasn't there on the call, and I'm like, why is the lead not on the call? It is, but anyways,
that's frustrating.
Zoe, it was a pleasure having you. Thank you so much also for doing this in English. I hope it was easy for you.
It's a bit difficult. Yeah, no, it was a pleasure. Thank you for having me.
And hopefully see you soon on a deal.
Yeah, sounds good. Let's do it.
Advisor.
Ciao.